Thank you, Sam, and thank you everyone for coming and showing up early to hear all about crypto accounting. And I think for today, really want to focus on the best practices that the crypto accounting and finance world needs to embrace. I'm going to start out. My name's Sam Leichman. I lead the blockchain practice at Propeller Industries. We are a full stack CFO down to staff accounting services firm that works with VC-backed startups. Been in the space since 2019. We're here today to talk a little bit about SoDA. I'll give a brief headline on that, but the purpose of SoDA is really to bridge U.S. GAAP balance sheet reporting with what you know to have on chain. We'll get into that in a minute or two. But before that, I'm really honored to be joined on stage with really folks who I've known each of you for years, have worked with you each for years, and really count you guys as friends as well as colleagues. And I think what's really impactful for this panel is going to be just a terrific variety of perspectives from tax systems and really from an operator's point of view. But let me be quiet and would love to have the panel introduce themselves.
Thanks, Sam. Rob Massey. I'm a partner at Deloitte, specializing on the tax side of crypto. I don't touch fiat. Deloitte serves all throughout the ecosystem, all the different competencies you may imagine with Deloitte: audit, accounting, systems, consulting, strategy, focused in crypto. Again, all segments of the ecosystem, and we absolutely love it. And I know Sam going way back to the Sausalito Ferry, those of you who have ever taken it. So ferry friends going back a number of years. And Amy.
Hi, everyone. Thank you so much for being here today. I'm Amy Kalnoki, co-founder and COO of Bitwave. Bitwave is the leading digital asset accounting, bookkeeping, tax tracking, RevRec, kind of full back office subledger and software system for businesses that are transacting in crypto. And we started it back in 2018. So like Sam and Rob said, a long time ago, we've been doing this stuff and talking about it. And really our mission from day one was to help enable businesses to be able to compliantly use digital assets. And from day one, they need to keep books and records. And so we set out to build a system to help them do that. And I'm excited to talk about SoDA today because I think it's a big step forward in your record keeping.
Hey everyone, thanks for joining this morning. My name is Brent Gerundo. I'm the CEO of Messari. I started off running the finance function at Messari. So have around 3 years of experience operating a crypto native company, and here to add my perspective as an operator, bringing basically sorting through all the madness of on-chain activity and ultimately getting into sensible financial reporting.
Good. So just a little bit of background to jump into the accounting side. The balance sheet, and this is kind of the SoDA origin story, but the balance sheet is there to really tell you what you own, your assets, what you owe, your liabilities, and what's been invested in you, your equity. Based on US GAAP, there's a variety of ways that you value your digital assets on the balance sheet. Some digital assets are at fair market value, others are at book or impaired value. So to really look at a balance sheet that has digital assets on it, the balance sheet in a way is broken. And that was really the premise for SoDA when we started to deliver financials to our clients. We realized that what was listed as digital assets on the balance sheet did not represent liquidity, and there was no visibility to actually what was behind the number. And so really the first reason we spun SoDA up was to say, let's just show our work. We knew operators, they didn't really care too much about what the book value is, but they did look at their treasury from the perspective of wallet asset and quantity. And so we really just wanted to make sure that they knew that the number that we were putting out on the balance sheet was correct and they could see it. But from there, there was a very easy step to get to, well, let's just bring this to fair market value because that is the number that operators cared about, which then also opened up a lot of things. We started to realize that you're beginning to see your entire wallet infrastructure. You can begin to identify and tag wallets with specific roles. And it is bringing up something that has been very important as we've gotten into tax and audit and other work, and that's namely wallet hygiene. And so this was, it started out with, I think it was us and Bitwave, and I think very quickly we were able to include our clients and but also realize that there were other applications for this this way to look at balance sheet reporting, and that's where tax, audit, venture reporting all came in, and it culminated in a white paper that we first released about a year ago. If you go to sodafinance.xyz, download it there, and has really evolved into, I like to call it a public benefit collaboration, but terrific partners and friends. We had an amazing event in San Francisco last week with great speakers. That's not why we're here today. Anyway, fast forward to why we are here today is to really begin to talk a little bit more about, what are the pain points that we experience in our respective fields, especially as it pertains to finance and accounting, and what are the things that keep you up at night, and how can best practices begin to address them? And Rob, if you want to kick that off.
And I was going to reinforce something you just said. Bringing visibility at a wallet or address level is very timely. So U.S. Treasury, jointly with the IRS in June, published regulations about how to track and relieve basis for different lots. We care about this in crypto, right? For those OGs around here, we care about the super low basis stuff and the high basis, and we keep buying. Some of us sell, very few of us probably, but we care about it. What Treasury clarified is that basis tracking is relevant on a wallet or address basis, right? And that is a clarification. Some of us could have guessed this based on tax principles, but this was a clarification, meaning that if you're going to use FIFO or Spec ID, the way that you relieve basis has to follow the digital physical within the wallet or address, similar to the way that, Sam, you've laid it out, right? So when you aggregate assets within a line item on the balance sheet, this doesn't tell the whole story. And by the way, we may need to go deeper than that which SoDA presents, but is directionally in the right way. So these regs are new. Everybody's getting used to them. They're effective for transactions on or after Jan 1, 25. And they also Treasury recognized that for a long time, people have been using different methodologies to relieve basis. They may think about FIFO on a global or universal basis. Treasury said that's not exactly right. So what they've done is they've given us until the end of the year to reallocate or reattribute your basis into the right addresses or wallets, reset it, take a snapshot, make sure that your brokers, make sure that your systems know about it one time to get everything reset. But again, very much in line with what the principles I think that SoDA sets forth.
Yeah. And the wallet by wallet tracking is obviously important for this cost basis update. But Sam, you mentioned something that's a really important concept, which is wallet hygiene. And the SoDA report is so important for that. We have a canned SoDA report. Pun intended or not intended, I don't know. I wasn't part of the naming process, but we do have a preset report in Bitwave that's a combination of two of our long-standing reports: the balance report, which shows you your value at any point in time, and the inventory report, which has cost basis information. It's combined with the standards that Sam helped establish. But what's important is those wallets are listed, and you mentioned different roles you can assign to the wallets: treasury, payables, revenue wallet. You can group that, because keeping track of your wallets at a crypto company or at a business, any business that's transacting in crypto, is not easy. It seems like it should be easy, but it's not. I can't tell you how many times we've had a customer come to us and get all set up on Bitwave, and then months later find a wallet that has $1 million worth of tokens on it that just people forgot about. And it seems like that wouldn't happen, but it happens all the time. So having a good system in place for tracking all your wallets, for knowing the balances in those wallets, the tokens that are in there, the cost basis that you acquired them at, is so important. And it's a key part of the new SoDA report, is having all those wallets listed, groups, and what's in them really easily visible to solve that wallet hygiene problem. And then now be able to take advantage of some of the new IRS stuff that's out there as well.
Yeah, just to expand on Amy's point a bit, I think first and foremost, as an operator coming into a crypto native startup or a non-crypto native firm, thinking about adopting digital assets onto your balance sheet, first and foremost comes down to getting the right tech stack into place. And I think Bitwave is a tremendous solution there. We've been a customer for a long time. But without that crypto subledger, you're basically shooting in the dark, making topside journal entries that you're never going to be able to audit or really make heads or tails of. The second point is you can have these systems in place, but they're only as effective as how well you track them and integrate wallets. Messari, for example, we're deploying subgraphs. We have on-chain BD activities. So it's not like bank accounts where the finance team is necessarily controlling all these wallets, right? You have to, you have to be distributing some crypto to your BD teams, to your engineering teams, in order to perform their work. But you really have to maintain that line of communication and understand, one, what the activity is, but two, making sure that they're communicating with you and that everyone's strongly aligned, because oftentimes if new wallets are created or transactions are happening and you have to figure out what's happening in retrospect, it can be a very difficult time come monthly close.
It's such a good point, because it's actually like hard to get a bank account set up for your business. I mean, there's a process. Often it's board approval is required, but it's so easy to spin up a crypto wallet. Like you could all do 10 of them while we're talking up here. Like it's just, they proliferate at businesses.
Interesting. When you think about stitching together now operations, which in crypto move pretty fast, right? Making sure that your systems capture at the subledger standpoint and the accounting standpoint. And something that the IRS clarified is that now when you're transacting in crypto and you want to use spec ID, you have to make sure that that transaction is identified before you make the trade. So if you have somebody in operations moving at the speed of light, you do not want to slow them down, right? So you got to make sure that everything is stitched together and you have processes built in so that you can actually make that call, then make the trade, have it all work through your books and records so that that trade is respected. Otherwise, you may get recast and be deemed to sell something you didn't intend to sell, which would obviously not produce the right answer. So this is where, things moving fast, we got to build the hygiene in tracking it from a wallet standpoint, but the process is because things are going to hang on recording those decisions and the books and records.
And Rod, that's a great segue to the next area that I wanted to touch on, and the next area is what's next. It's kind of, we had talked through sort of what is the story of this particular moment in time, and let's jump to the other side. Brent, running an operation, overseeing ops and finance, and to Rob's point, knowing that the roles and responsibilities within your group are evolving. How do you see the future as a operator? And I'd say for the rest of the panel also, how do we need to be evolving from where we are today? Not just trying to keep up and do proper reporting, but proper planning, being ready for the known unknown that's going to be coming from regulatory or tax. But Brent, if you want to start.
Yeah, so I think, at a very basic level, stable coins are tremendously valuable for basically any company. We settle probably 50-60% of our business in stable coins today. I think just to get to that very basic use case for crypto, I mean, you need to have all these systems in place. You need to have centralized exchanges. You need an off-ramp solution. You need a payment gateway. A lot of those are very early in their stages. Because without those, I think demonstrating proper control is nearly impossible, and you're nearly dead in the water from the start.
And Brent, one more follow-up for you. How do you envision finding the practitioners to staff your department, going forward?
Yeah, it's incredibly difficult to find finance practitioners, accountants who are extremely crypto native. And I don't think that's, I have one right here, Shane, in the front row. He's been really great. But I think really assessing, agility and flexibility in order to learn. I think having that strong financial or accounting fundamental background is the most important, but having that willingness, like live on the edge a little bit, iterate with a lot of systems. I think we've like swapped through probably a dozen or so different crypto systems. So you really need to have someone who's hungry to try out different systems, figure out what best practices are, and kind of assemble that perfect tech stack that doesn't really exist today, right?
I think, it takes a team. I think I've heard you say that before. There's a lot of different pieces to having the crypto industry really get up to par to what traditional finance is. It's having the right team, both internally and having the right advisors externally and experts in the space. It's having the proper controls and processes in place for day-to-day operations. And then it also takes a software system to be able to track and document everything that you're doing, because there's so many different moving pieces.
It's an interesting data point. You're now, I think I heard you right, more than half of your transactions are not in fiat. There's a growing number of companies that are hitting that state. And even at any material amount, what you learn is that the muscle in an organization to deal with systems, control frameworks, how do you deal with separation of duties? I mean, there's all these different things in play, even if it's just stable. It's like, oh, that's easy. It's actually not. Right? How do you control the universe of transactions, make sure it's all captured from a completeness standpoint in your financial statements? Do you have the systems to catch it? But it sort of permeates into all the different departments. And you have to rethink how the business runs. So you have your control framework set up. There's unique tax considerations. There's unique accounting considerations. It's all of it. So good on you for leaning in though, Brent.
Yeah. And I hope you're the example of businesses moving forward, because I would love if half of everybody's payments were in digital assets and cryptos, because we are still looking for that killer use case for businesses. Right now, the most used apps in the crypto space are all exchanges. So everyone loves trading, everyone loves playing the markets, but we really need that business use case, I think, to drive adoption more broadly. And I think payments is a great contender for that.
Yeah, I mean, we get really lucky just working with so many protocols who have kind of their on-chain treasury. But we are seeing more and more adoption by enterprises. They're slowly seeing, it's much easier to send USDC. It takes, 17 minutes or less to settle versus a wire, making sure you hit that 3 p.m. deadline and not being able to send money on weekends. So we're seeing a lot of pickup from enterprises as well.
And we're working on building out a lot of payments features in Bitwave to easily reconcile that back into your general ledger and make sure that all of it's accounted for.
I think that talking stablecoins for a second, it's number one, whenever the question comes up, oh, crypto doesn't have a killer app use case. We do, and I believe at this point it is stablecoins. But it also brings up an interesting point that I mentioned earlier, that there are two accounting treatments that you have to be considering when you're putting digital assets on the balance sheet. When we set up a chart of accounts for our clients, we actually will break out fair value reporting, lower of cost or impaired or book value. But then on the balance sheet, we actually break out stablecoins as a separate line item in the chart of accounts, because while it doesn't belong in cash, it does have huge relevance when you think about runway, and it speaks to a value that your fair value definitely does not, and your book value does not when you want to think about the health of the business. An observation, I'm not sure there's any Rob, it looks like you may have a comment on that, or?
We think of stables as money, and they track really, really close to a US dollar or different fiat currencies around the world. But the fact of the matter is, it's not money. It is still property. And the treatment may vary based on the transaction you're entering into. It may be a virtual representation of a dollar or a bailment, or it could be a debt instrument with the tax lens. And so the types of transactions you're entering into, be they contracts with vendors, cross-border transactions, we don't have a lot of rules, particularly globally, right? There's no tax treaty today that addresses crypto, inclusive of stables. So you got to be really careful about cross-border transactions. You got to be careful about information reporting and all the rest of it. So while we think about it because the value tracks really closely, it's not money. So it's just, little reminders there. Again, it's good, right? We all like it for the right reasons, but it's that extra step while you're gaining efficiencies because of those you mentioned. There's all kinds of reasons to engage. We're seeing, more real-time settlement, right? We gain a little bit of control. We can transact, whenever we want. A lot of transparency, Vendors love it. Our employees love it. It's fantastic. But don't forget to go that extra step to say, what's the thing, right? What do I have and how is it treated uniquely from a tax and accounting standpoint?
No, I think it is that, I think about what do accountants want when they decide to get into accounting. They don't typically get into accounting because they want rules that are evolving and systems that are evolving with them. They want to do their AP in the morning. They want to do their bank recs on Friday, payroll every other Tuesday, and close the books the third Wednesday of the month.
Why do we get paid only every 2 weeks, Sam?
Do we have another half hour for additional conversation? I'm going to get off of maybe the core accounting and finance discussion for a second. And I think about my story getting into crypto starting in 2019. And, it dawned on me that I was doing something completely different, and it's never really a whole lot of fun in an adult profession after you've had a profession to say, I'm going to jump into a field that I don't have a clue what's going on. And something that touched me was just the incredible ethos of, I'll say, the crypto finance and accounting industry, and the incredible generosity that people had with their time. And again, I think maybe want to focus this on the back office and just our ability to do the jobs that we're focused on. But what have your guys' experience been with collaboration of? I'm going to be pulling a term out from 2021, but I always loved WAGMI, and I hope it makes a comeback because it really did embody so much of what I loved about the industry. And but anyway, I'll stop talking. And Amy, why don't you start?
Sure. I second everything you're saying about just how open people are with their time in this industry. I love coming to these types of events, hearing about the projects that people are working on, sharing about Bitwave. It really is a very collaborative part of the whole crypto ecosystem. And I know part of the SoDA report that we've built in the canned one in Bitwave is making it really easy to share. So you can write in the UI, put in an email for someone you want to share it. Maybe it's one of your VCs or advisors. And really, the point of that was to recognize that it takes a lot of people. You need to report to a lot of people. Having a standard set of, tools and language that we use to communicate about the status of our business is really, really important, because there are a lot of people involved in making a company successful and in making a whole industry successful, especially a new one like digital assets.
I had a career before crypto. And it was not collaborative with other advisors. We would be working on a deal, and the tone, the energy when you would show up on a call or a meeting with other advisors was very standoffish, right? Very guardian. And then I was 13, this is year 13 for me, and I noticed a shift in the way that advisors work together, be they law firms, sometimes multiple law firms involve multiple accounting firms, advisors, bankers, whoever it is. Everybody is collaborative, not just with their time, but through a deal. And it's really important because when you're looking at these transactions, it's new for everyone. You can't assume you know what the accounting rules are because they're different. You can't assume you know what the systems is going to do because it's different, or how we want to use it in the business. You got to all show up together and be on a lot of the Zoom calls with a lot of squares, since we're all spread out. I mean, this is how it happens. And I would encourage you, particularly on the hard transactions, you're working through them, spend the time and get more people on the Zoom every once in a while. While it may feel like, oh my God, what is this bill going to run me when all is said and done with all these people? But it's amazing when you get all the different advisors on the same call every once in a while. You'll watch the pace of evolution of that transaction accelerate because you can hear each other talk. You can get into the nuances. You hear the overtone in the voice, getting beyond the text they're putting in the emails. So I think the collaboration is key in solving the really hard stuff when we have very few rules.
Yep.
Yeah, I would just echo that collaboration is really baked into the ethos of this industry at large. In particular, when you're thinking about something like balance sheet reporting, a lot of the regulatory challenges that we're stepping into the next few years, our best shot moving forward is to work with competitors, work with peers, because all of our best solutions are being put forth when we come together and present our own solutions rather than having the solution dictated to us by someone who doesn't understand the practicalities of how you have to operate in this space.
I mean, maybe in 20 years, folks on this stage will have the sharp elbows and you won't have Big Four talking Big Four again. But I feel very blessed to be in this point in time right now with this industry. And I just talking about collaboration, and I look at the panel, we really developed SoDA with Bitwave. We were banging our heads against the wall, trying to find a solution, working with Amy, working with Pat. Rob, you were among the first calls that I made to say, hey, this is how we're thinking about this. How wrong am I? And then Brent, as a client of Propeller at the time, you were very gracious to be the yeah, okay, we'll let you lay this on us. But no, I think collaboration is certainly is key for I think the evolution of SoDA, and I think it's really important for the industry. In a few words, one sentence or two, we've got a couple minutes left. What are you looking forward to in 2025?
Digital rights management. I want to see smart contracts wrap around a transaction and do real-time revenue splits to all the right parties. It's time, right? You've got PayPal bringing access to, half of adult Americans right now. So we have access. We have the on and off ramp. People can deal with it. Let's go.
Yeah. I see, keep the updates and the guidance changes and regulation coming, because businesses don't like regulatory risks. No one is trying to do the wrong thing. People want to do the right thing. So the more clarity, the more regulation, the more updates we get, the better, so that all businesses can really feel confident when they start engaging with digital assets that they are doing it correctly. And I think that'll really move the industry forward. So keep it coming. Updates all around.
Yeah, I'm excited about two things over the next year or so. I think first is payments, really supercharging the payments infrastructure. We've been talking with Stripe a bit about them adopting stablecoins. I think that's kind of a Trojan horse for the holy grail with crypto, obviously, which is balance sheet adoption. I think stablecoins, the value prop is immediately apparent, and that leads the way to Bitcoin, Ethereum, Solana make its way onto corporate balance sheets. And ultimately, we're bringing a lot more finance and accounting practitioners into crypto.
Yeah,
I'll bring us some. I think certainty in 2025 is what I'm most hopeful for. There is, I think, the political world has woken up that there are votes and money at stake, and it's not a binary partisan issue. It can't be, and maybe I'm wrong, but I'm hopeful that we're not going to have the narrative of a anti-crypto anything on our docket in the new year. But thank you all so much for your friendship, partnership, and joining me today.
Thanks, Sam.
Thank you. Thank you, everyone.
Thank you, everyone.